What's going on, everybody? It's Friday again, so we're going to do the same thing like we did last week. We've got a guest. Nobody wants to hear me ramble. So we've got a guest on. His name's Collin Phaup with Goosehead Insurance. Great company. Been around for a while. They know their stuff. If you guys are looking for home, auto, life, toys, ATVs, side-by-sides, boats, camper trailers, it don't matter. They've got you covered. So kick back, grab a drink. This is another long one. Try to keep it short, but unfortunately that apparently is not in my vocabulary. So again, contact information is going to be down below. If you want to reach out looking for homeowners insurance, looking for auto insurance, want to combine, maybe save yourself some money. These are the guys to talk to. So without further ado, I'd like to introduce Collin Phaup with Goosehead Insurance, and I hope you guys enjoy. Hey, bud. How you doing today, man?
Good. How are you?
Man, I'm doing well. So let's just go ahead and jump into this. I want to keep this to like a drive time. That way I don't want to waste your time, and people's attention spans are pretty short these days. So we're going to try to keep this. Last time we were going to do 10 to 15 minutes with another person. It ended up being about 30. So
Yeah, it happens like that. Most people don't want to hear about insurance for more than 5 minutes. So
well, hopefully we'll keep this fairly entertaining and informational. So, and
there
if you
you
need
go.
to go, just kind of give me a signal and we'll wrap this up. But
I'm all yours, buddy.
let's jump in by why don't you go ahead and introduce yourself, tell everybody who you're with,
Cool.
and we'll start off from there.
Yeah. So Collin Phaup, agency owner with Goosehead Insurance here in Tyler. I'm the OG of East Texas Goosehead. So I started my Goosehead agency January of 2013 after about 8 years at my dad's farmer's agency. And
Okay.
coming from the captive world and only having one carrier option and expecting every client to fit in the same box, just got to be untenable. If it wasn't their target market, then our rates reflected it, and I really wanted choice for my clients. And so Goosehead came for dad, and they left with me. That's the story that I like to tell. But it was a great independent agency opportunity where they take a lot of the stuff off your plate, so you're really able to be client focused. And they provide you a ton of carrier appointments with some of the top independent carriers nationally and statewide. So you really, without production requirements, meaning that I can put the client with the best overall carrier without having to worry about satisfying, a certain amount of premium to a certain carrier in order to maintain that appointment. And they take the service aspect off of our plate. So we're able to be risk managers, insurance counselors, sales professionals, and really stay focused on our clients instead of getting bogged down with paperwork.
Awesome. That was a great introduction, by the way. That seems like you've done that once or twice before.
Maybe a few times
Maybe.
in the last, 7 years. So
Well, speaking of that, so you said when you were with farmers, you called that, what was the term that you used? A captive?
captive, yes.
Captive. So what's the difference between like a farmer's insurance agency and like a Goosehead?
Yeah,
It's
so
the layman's term for the person up there that doesn't know.
yeah, 100%. And there's something to be said for captive agencies. I mean, your underwriters, your claims people, but the problem is that you only have one carrier option, and you work for the carrier. I don't work for the carrier. I work for my client. So my client is my employer. So I work for them and not the insurance company. And that's a big differentiator. And so, for me, having that choice model, being able to serve, the mobile home client to the mansion client and everything in between, rather than being, target market with just one option. It also really kind of helps long-term because every carrier is going to go through a rate cycle, meaning that they're going to want to gain market share and their rates will reflect that, their products will reflect that. And so you'll write a lot of business, and then that carrier will really kind of absorb as much as they possibly can. And then their rates are going to go up. And so they'll go back into a top end of a rate cycle. And when you're with a captive carrier like State Farm, Farmers, or Allstate, even USAA and some of these others, the client has to take that ride. They have to ride the roller coaster because you don't have any other options for them. And in the independent world, like we have here with Goosehead, is we're able to, when that carrier goes into that top end of the rate cycle, we're able to remarket that client and move that client to another carrier who's on the opposite end of that rate cycle. They're hungry for the business when the carrier they're with is no longer hungry for it.
I was wondering about that because it always seemed, and I heard somebody tell me that a couple of years ago. They were saying that like if you're with one of the big names, the single carriers, the states and the farms of the world.
Yes.
If they have too many policies in a central area, then they just jack the pricing so they can manage that book. Lack of a better
You
word.
do. Yeah, and you see that a lot really here in Northeast Texas, where we're kind of what they call in a hail belt, where we get a lot of hail claims. They'll get even down to zip code specific on, you know, whether they're willing to continue writing new business in that zip code. And then what they'll slowly start to do is age those clients out that are in those zip codes by, you know, increasing their rates, basically forcing those people to leave.
Oh, wow.
And when you're captive, I mean, you don't have any other options for them when it comes to that. And here, if we had a carrier that was like, hey, we're no longer interested in, you know, Tyler business, we would have 20 plus carriers that are.
Of course. Perfect. And you kind of mentioned something, and we'll jump into that in a minute, talking about like the hailstorms in the local area.
Yeah.
So, but we'll jump in. I've actually got some notes. So just as a high level, because some people who watch this may not know, what exactly is like homeowners insurance? Maybe you can.
Yeah. So, and that's a great question. So homeowners insurance is going to protect your home, the physical structure. It's going to protect your personal property, all of your contents. It's going to cover your loss of use of the home. So if you are, you know, if you have a claim and you can't live in the home, it's going to pay for you somewhere to live, help you maintain your standard of living.
Okay.
It should protect your liability. So if somebody's injured or killed on premises, it covers lawsuits. It'll give some guest medical protection to hopefully avoid that scenario. And then, you know, there's a lot of different facets to it, but, you know, obviously there's some endorsements that you want to have to cover some internal waters. You want to make sure that you have replacement costs to make sure that you're getting new for old in the event of a loss. So there's really a lot of pieces to that homeowner's policy. It's not something where somebody goes, hey, I have a house built in 1985. It's worth about $250,000. What's that look like on insurance?
Right.
Because there's a lot of variables, and some of those variables, you know, are based on the client, and some of those variables are based on the home itself and where it's located.
Gotcha. So you mentioned endorsements, and that kind of brings up you know, I think 2 or 3 years ago, White House had a flood, and it's not good of. And I know a lot of people had to replace a lot of carpet. So if you're in an area that's not historically, like Houston, for an example, I mean, let's use that. So like, you know, they were having 500-year, you know, floodplains or flood, you know, maps that were basically having to be redrawn because of all the stuff that happened. How does that work on the insurance side of things if somebody doesn't happen to have that said endorsement? Is there anything you can do, or is it, I mean, how does that work?
Yeah, so I mean, you know, FEMA will still write a check to homeowners that are affected in those areas. The problem is that it's usually pennies on the dollar for what you need to actually, you know, replace that damaged property. And so you would, you know, in those scenarios, wish that you had flood insurance. And look, I mean, you know, everybody lives in a flood zone. That's the question that I usually ask in seminars is, hey, raise your hand if you live in a flood zone. And then you'll only get a couple of people that raise their hand. And I'm like, hey, everybody should be raising their hand because we all live in a flood zone. It's just that most of us live in flood zone X, which is a preferred flood area, right? So it's not on any of those flood maps. It doesn't require you to have or furnish flood insurance as a part of a loan. But 17%, I believe, is the last statistic that I saw. 17% of all flood claims come from preferred flood zones. So just because you're not in an area that has a high propensity for flood doesn't mean that it can't happen. It definitely can. And the advantage, you know, if you're in a preferred flood zone to having flood insurance is that it's a lot less expensive. I mean, it's one of the only policies that I can just tell you right offhand based on how much coverage you want, what the premium is, because the rates are set, you know, by FEMA through the National Flood Insurance Program. And it can be pretty affordable.
And that's something you offer, correct?
Absolutely, yeah. So we have FEMA-backed policies, National Flood Insurance Program policies, and then we've actually also got private flood, which I really like the private flood market because the premiums are more competitive, and it's a broader level of coverage. You can get more than the $250,000 maximum on the dwelling that the NFIP limits you to. You can cover contents at replacement cost. You can get loss of use. I mean, there's a lot of advantages to private flood other than pricing.
Nice. So speaking of that, let me kind of change gears. So, you know, let's keep on the same train of thought. So somebody has a house and they have homeowners insurance, but they have, let's say their hot water heater blows up.
Yeah.
floods the house. Now, this is not an act
Yes.
of God. Does that fall under homeowners insurance, or is that like something else they need to look into, or how?
Yeah. So really what you want to have, and in most open peril policies, like an HO3 or an HO5, you're going to have water discharge included. So that would be covered, and that's going to be a sudden and accidental discharge, eruption, overflow, or release of water or steam from a plumbing, heating, and air conditioning system or a household appliance. So in that scenario, the hot water heater bursts and floods the home, the water damage is covered. Now, the cost to replace the hot water heater is not covered because that's considered a maintenance item, right? So maintenance, defects and things like that are exclusions. So the home insurance carrier won't pay for the hot water heater. The home warranty might,
Okay.
but the water damage that results from the eruption of the water or the release of the water is going to be covered. And so you want to make sure that you're in open peril policy form, or if you're in a named peril, you need to make sure that water discharge is endorsed, because that's probably the most common water claim that we see. There are other, internal water coverages that we can give, like backup, like reverse flow from a sewer or a drain system, slab and foundation access coverage. If you have a pipe burst in the foundation, the cost to access that leak would be covered. And then seepage and leakage of water, which, unlike a water discharge, which is sudden and accidental, seepage and leakage is a slow and intermittent seepage and leakage of water. So just a system that leaks slowly over time. It's not a sudden and accidental, like pressure type of leak.
Awesome. So I think this may be something that people may be getting confused on. So you have homeowners insurance, and then you have a home warranty. And
Right.
those are two completely separate things, correct?
100%. Yeah. So home warranty is like systems coverage, right? It's going to cover if the garage door, motor drive stops working. It's going to cover if your dishwasher, fails, or if your washer and dryer stop working. So home systems coverage is really where home warranty comes in.
That's where who would replace your hot water heater if that thing busted.
Yes, exactly.
Okay.
They'll take care of the hot water heater. We'll take care of the water damage.
Gotcha. Okay.
Yep.
Perfect. So we talked about what homeowners insurance is, what's kind of covered. We talked about, like, there's different endorsements, so we talked about that. You also mentioned that in your personal property, so I'm assuming grandma's diamond necklace, that gets covered under the homeowners insurance policy.
Yeah, and so if it burns in a fire, your limits of your personal property are what you're looking at there. But with jewelry, fine arts, furs, antiques, and things like that, sometimes you'll see in a homeowner's policy some limitations for theft of those items, which is probably actually going to be more common on that type of property, that you're going to see, a loss resulting from theft. And there are some limitations in most policies for how much they're going to pay for any one item or total jewelry. Antiques, fine arts, and furs fall under that as well. And so it is important, if you have a really quality piece, a high dollar piece, that you let your agent know that you've got something like that. And hopefully they'll ask as a part of their discovery process, that you've got something like that. And usually what we can do is either raise that sublimit as it pertains to theft, or we can schedule that item. We can do a jewelry floater or something like that, where we'll use an appraisal or receipt, and that's an agreement between you and the insurance carrier on how much that item is worth. So there's no questions if you have a loss. It will usually waive the deductible. And so, it's a much better way to cover high value items. So if you have any big ticket stuff, electronics, not really something you need to look at. But if you have any big ticket items as far as jewelry, fine arts, furs, antiques, and things like that, it's a good discussion point with your agent.
Is it kind of like a rider that goes on top of
it? It is.
Okay.
Yep.
Okay.
Exactly. Yep. Exactly. So it's a part of the policy, but it's its own separate coverage. Yeah.
So another thing that I was thinking about, and this, because I've seen this from time to time, do people have to have homeowners insurance?
So if you own the house free and clear, if you paid cash for it, you don't have to. But I mean, I don't know anybody that, look, if you pay cash on a $250,000 house, protect your investment. I mean, and I've had clients literally get to closing, and the closer's like, "You got your homeowner's insurance, right?" And they're paying cash for the house. So they don't have to have it. They didn't have a lender. They didn't have a Chad going, "Hey, we got to have this."
Right.
But, somebody will ask, and they're like, "Oh, I didn't really think about that." So it does happen.
Okay.
But, I think it's really about asset protection, right? I mean, if you get to the point where you can pay cash for a house, you're a smart person, right? And so a part of being smart, hopefully, is that you protect your assets. And in the home may be, if not, one of the greatest, assets that you'll have. It's a appreciable asset in most cases. And so it's a pretty smart idea, to protect that investment.
Cool. I already know that, but I just want to put that out there because I've heard people talk about, I don't need homeowners insurance. Well,
right.
You should. So we talked about this just a minute ago. We talked about some storms and some hail and damage like that, because we were talking about floods. But I know on Easter we had a really bad storm, rip through East Texas. We've also had some hail here recently. You want to talk about a little bit about like if somebody has damage to the roof and what are some steps involved in doing that and so on and so forth?
Yeah. So first and foremost, know what your policy limitations are, right? Because there are some insurance carriers out there that, they're going to cover your roof and your property for damage due to wind or hail, but they might limit how much they pay you. So there are some carriers out there in the Texas market that are not going to give you full value for your roof. They're going to limit that.
AVC or AVR or something like that?
ACV, yeah. So actual cash value. You might find yourself in an actual cash value position on the roof, meaning that, they're only going to pay you what that roof is worth at the time of the loss, meaning they're going to factor in age and depreciation. And a roof is obviously going to depreciate, pretty quickly here in Texas. And so once they take that depreciation out and then subtract your deductible, you may get half of the cost that it actually takes to replace your roof. So be especially careful with ACV, actual cash value policies, but also be careful with carriers that do what's called a roof schedule or a depreciation schedule on the roof, meaning that for every year that roof ages, they're going to pay you less and less to replace it. And we're starting to see that even with some big carriers out there, that, when that roof gets to be a certain age, they're no longer going to give you replacement cost on that, or every year that roof ages, you get less and less to replace it. So if you can find a policy, one that will give you full replacement cost, regardless of the age of the roof, that's going to be best case scenario, because that means once you replace it, you have a second check coming to you for that depreciated amount. So really all you should be out is your deductible, rather than your deductible plus 40%. So know your policy would be number one on that, and have those discussions with your carrier and your agent, because, honestly, the average claim frequency on hail here in Texas now is every 6.7 years.
Oh, wow.
And so, it might save you money today, but it's going to cost you a lot more in the long run, especially with as much hail and wind as we have here. The other thing to be careful of is your deductible, because you might save some money by going to a 2% deductible, meaning 2% of your dwelling amount rather than 1%, which is really standard. So yes, that might save you $100 a year, but it's going to cost you double on what they withhold from your claim check when you actually have to make a claim. So most of the time, you're not going to net any savings with that type of claim frequency. If you go to a higher deductible, it's going to end up costing you more in the long run. The other part of that is, be careful. When we have hail losses here, the roofing professionals all still they kind of come out of the woodwork,
yes,
right?
They do.
It's like you're in the shack and you turn the light on and here come all the roaches. So yeah, be careful on that. So, our suggestion is, BBB, do your due diligence, friends, family, colleagues, make sure they're live and local. We've had some roofers come into town, rent an office suite and get a local phone number so they look local. And then when they are done working the storm, they're gone, and they're never going to be responsible for the work that they did if there's an issue as far as performance is concerned. So use those tried and true, long-term roofers that have been here for a while and are proven in this market. That's really secondary to me.
And of course, if somebody had questions, I'm assuming they could always reach out to you guys if they needed a name.
Yeah, we're a pretty good resource for that. We can definitely tell you who our clients have had good experiences with and who we've had good feedback on. Yeah.
Awesome. And of course, everybody, I'll have Collin's contact information in the description below, so you can always pick up the phone and give you guys a call, or somebody in your office can point somebody in a
100%
proper direction. So when they do have, let's say they have a claim, we had hail, it was pretty bad. I know like Nacogdoches really got hit real hard.
Yeah.
What's the first step? I'm assuming they need to pick up and call their carrier or their insurance agent, or how do they need to handle that?
That's really a great question. And what I tell my clients is when you have a claim scenario, call me. I mean, it's my job. So we maintain the service of every policy that we sell. So we don't just broker, with the carrier and then leave you to deal with the wolves, when it comes time to have a claim. It's my job as the insurance professional to help you interpret coverage, get you connected with the carrier, and to guide you through that process. So sometimes we can save you some heartache. I know out of that Easter storm, we had a couple of clients that had, wind, and it knocked down the fence, and, really, to replace the fence or to repair the fence, it's not going to exceed the deductible. So there's no sense in calling in directly to your carrier, filing a claim that ends up being $0. And now it shows up on your loss history, and any future carrier is going to ask you about that claim. So, sometimes we can save you a little bit of that heartache, but we can also kind of, give you some education on how that process is going to go and guide you through it.
Awesome. As far as like coverage itself, I mean, like how much coverage does somebody really need, or how is that factored? How do you guys come up with like, this is what it's going to cost somebody? And also too, is credit a factor into this?
Yeah. And that's really twofold. So, when it comes to how much to insure your home for, the majority of our carriers are going to use a detailed reconstruction estimate. And there's a lot of different estimating software for that. Some of it's proprietary by the carrier. Some of them use, third-party services like Marshall Swift Beck or something like that. And so, we're going to input a lot of data. I mean, from the type of shingles you got to the type of flooring you have, bedrooms, bathrooms, if you have a porch. I mean, there are, just innumerable variables in a reconstruction estimate. And so it's our job on the front end to build a reconstruction estimate so that we can figure out how much it would cost in today's dollars to rebuild your home.
That's right.
And the detachment that we see honestly is that a lot of times people are getting a really good deal on the house. And so we're wanting to insure the house for a lot more than they're buying it for. And we get that question. It's like, well, why are you insuring it for so much when I'm buying it for so little? And that's really because the carrier, they don't concern themselves with, how good of a deal you got. They don't even care about necessarily your appraised value, your purchase price, those kind of things. They're giving you a promise in a replacement cost policy that they can rebuild a home of similar size, construction quality, and characteristics. And so a lot of times that new construction cost is vastly different than purchase price. And so that's where we really come in on, what we do as professionals is building an appropriate reconstruction estimate so that you get fair value and can rebuild your home in today's dollars if you have a loss. As far as credit, yes, credit can have an impact. And with most captive carriers, credit is a much bigger factor. And so we have some carriers that focus more on what they're insuring rather than who they're insuring. And what I mean by that is that they're not going to rate as heavy on a client's credit profile, which to me is a much fairer metric on looking at the risk involved in the actual structure in the home rather than what some client's credit score is. But it is an actuarial thing, with a lot of carriers that they factor in as far as credit is concerned, as far as what rates and what tiers you qualify for in a homeowner's policy. But there are carriers out there that don't look as heavily at that. They're going to underwrite more carefully on the risk itself. The age of the home, updates, these kind of things are going to be more of a factor than, what a client's credit score is.
Cool. Well, that's good. I mean, because I know that's a lot of people don't know that it is most of the time, or sometimes that it is credit based. So I think that's good information for people to know. But
100%.
Something I think a lot of people want to know, of course, it's just especially with everything that's going on right now, are there some tips or tricks that they can do to lower their overall insurance load, debt? You know what I mean? Like, so you have your homeowners insurance, you've got car insurance, you've got, is there anything they can do to bring those numbers down to help out financially?
Yeah. And most of the time when a client calls us because they're buying a home, we're always going to ask about the auto. And that's because, package business, it's going to give you discounts both ways, which is great. But, package business usually retains better because, carriers are more, when they have a rate increase, it seems to impact their package clients less than it does their standalone clients. And what I mean by that is a carrier knows that if they raise the rate on one and you're packaged with the other, if they lose one, they're probably going to lose both. And so, package business seems to be more stable on premium. And so we do always attempt on the front end to make sure that we're looking at, both sides of that deal. If we can save you some on auto and give you a good homeowner's rate, and that policy is going to be, those policies are going to be more stable over the long term, that's a win for everybody. On the home side, there's a lot of different things you can look at. And one of the things to be real careful about now is how old your roof is. And for those reasons we talked about earlier, homes with roofs that are older than 15 years can be more difficult to insure. But on the contrary, if you have a roof that's been replaced in the last 5 years, a lot of carriers are rewarding that with better homeowners insurance rates.
Really?
So if the roof's been updated, and a lot of them here have been, if the roof's been updated in the last 5 years, you can find yourself in a more competitive position as far as the homeowners insurance is concerned. So there are a few different things that you can look at on the property side. If there's been updates to major systems, so if it's an older home, but it has, new hot water heater, new heat and AC, updated electric, updated plumbing, those kind of things can be an advantage for you on premium as well.
Now, I know back in the day, at least I think this was the thing. You used to get a home security system, and then that would help
yes.
your homeowners insurance.
Right.
Is that still true today, or?
Sure. Now, it's never as much as the alarm company will tell you it's going to save you, right? They'll be like, oh, it's going to save you 20%, right? So what I tell my clients is this: if you do an alarm system, do it for peace of mind, right? Don't do it for the discount, because the discount is almost never enough to outweigh the cost of the monitoring, which the monitoring is going to be required if you want the discount, right?
Absolutely. Of course.
And so, but you can't put a price on peace of mind. And so if you do it, do it for that reason, not the discount. The discount will be, icing on the cake. But the peace of mind should be the thing that's in the, front of your mind when it comes to that.
Cool. I only had one more question on my question list, and this was just because I was having a conversation with a buddy of mine. What about like odd situations? So let's say somebody had a property they were using like for a rental or Airbnb. Have you ever came across that? And
Sure.
Somebody should keep an eye on when going down that road?
We had one the other day, actually. They live in the home 11 months out of the year, and 1 month out of the year they rent it. So
okay.
And it's on the lake, and so they take 1 month out of the summer when they go to their vacation home. So cool.
Right.
So they go to their vacation home in the mountains, and then they rent this home on the lake in the summer months, right? And so you do need to be careful, because there are some pretty strict limitations, in most homeowners policies in that owner-occupied form for short-term rental. But there are some carriers that offer endorsements. So if we know that on the front end, that's your intended occupancy is 11 months out of the year, we're living in it, and that 1 month out of the year, we're going to do it on short-term rental, we're going to put you with a carrier that's cool with that. And it's the same thing with like dogs and trampolines and swimming pools. The reason we ask a lot of questions, and I know you had mentioned it earlier, like, okay, these are my government nosy questions, right? So yes. We're going to ask some, I guess, maybe nosy questions on the front end, like what breed of dog do you have? Are you going to have a trampoline? If so, is it netted? These kind of things on the front end, because we work with 20 plus carriers. And so we don't want to put you with a carrier that is not cool with a certain aspect of your lifestyle, right? Whether it's occupancy or animals. The reason we ask the questions that we ask on the front end is to save you heartache on the back end.
Awesome. Well, that's all that I had on my research. Is there anything that I forgot to ask that I should have?
No, I mean, you did really good. I feel like we covered like the super important things when it comes to that.
Okay.
And look, I mean, so let's take it from, where a client would be coming from with you. They're buying a house, they've gotten pre-approved with Chad, and they found the house. They're like, oh, this is great. The question I get a lot is when do I look at homeowners insurance? And I tell clients all the time, and I tell our realtor partners and our mortgage partners as well, the best time to look at homeowners insurance is when you're in that option period, right? Yep. So before you're locked in on that deal, when you're an option, on a contract, that's the best time to look at homeowners insurance, because we can look at some different things for you that'll be an advantage. One of those things is the loss history on the home. Sorry.
It's okay. Heads up. There we go.
Yep. Got a phone call. So one of those things is loss history. And on the loss history side, if that home has had a prior water loss, a prior theft loss, a maybe a prior fire loss. Those are things that you want to know before you buy that home, before
Because
you
that's
get
going to
out of that
affect,
option period.
that's definitely going to
Yeah,
affect them, of course.
absolutely. Even though it wasn't your loss, it can impact the eligibility with certain carriers on whether or not they're willing to inherit that risk. On the other side of that, we can look and see if it's in a flood zone. Is it in a moderate to a high hazard flood zone? So now, in addition to the homeowner's insurance, the hazard insurance, now you're going to be required to also furnish and maintain flood insurance as well. So that's an additional expense that might throw off your ratios on lending if you have to, maintain flood insurance in addition to homeowners insurance. So we feel like that's the best time to jump in is during option period on when to get a quote. And I think that's just solid advice all the way around. That way you have a full and clear picture of what you're buying.
Of course. If somebody wanted to talk to you about, home auto, is there any, do you all just do home auto? Do you do like anything else outside of that? Or is
Yeah,
that your mainstay?
we do home, auto, life, some small business. We do all the toys, boats, jet skis, motorcycles, ATVs, motorhomes, travel trailers, all the fun stuff, all the
Nice.
toys. Really the only thing we don't do is health insurance. We have some partners we work with on the health
Okay.
insurance side. It's just kind of a mess. So
Oh,
I just strategically said I'm licensed to do it. I've done it before, but I feel like that's a focus market for those insurance professionals. So we have a couple of partners we refer to on that. And then anything heavy commercial, we have some partners we refer to on that as well. But small business, simple commercial stuff we can do as well.
awesome.
But yeah, home, auto, life, and all the toys, all the fun stuff.
So if somebody need to get a quote on their, their home and their car and of course, their jet boat, what's the best
Yep.
way they can reach out to you guys? What's a good place to find you? What works for you as far as getting in contact?
Yeah, so a couple of ways. I mean, one, I've got a great team at my office, all licensed professionals. So you're always welcome to reach out to us directly at 903-534-5800. We have a cool website, thegooseheadguy.com.
Nice.
So you can go to thegooseheadguy.com and request a quote there. We'll get a notice on that and reach out to you. So those are really the two best ways. We have, all the social media as well. You're welcome to reach out to us there. But if you need fast, quick action on something, call us by phone, and we're happy to run it down for you.
Well, awesome, man. I really appreciate you taking some time to kind of, educate and explain to people, because it's homeowners insurance is one of those things that most people don't just, it's a Thursday. Let's go shop for homeowners insurance.
Yeah,
So,
that never happens. Usually they get their renewal, or they get their escrow analysis and they go, hey, why'd my home payment go up? Why'd my mortgage payment go up like $200? And the mortgage company says, well, yeah, your taxes and your insurance both went way up this year. So, you'll get that. And we're getting a little bit right now where, people are hyper focused on what their expenses are right now. And we get that. And now's a great time to shop. And we've had a couple of auto carriers recently lower rates. We've got some homeowners carriers that are very well positioned on rate right now as well. And so, if it's been a while, if you've been with your current carrier, 5+ years, this is a really good time to shop. There's probably better rates out there for you.
Perfect. I don't think we could have ended it any other way better.
Sales
Awesome,
pitch.
man. Well, like I said, I'm going to put your contact information in the description below. If anybody wants to reach out to Collin, just pick up the phone, give them a call. I can attest that their team is great. So awesome, man.
Appreciate
Thank you
that.
so much for your time and the education and just paying it forward, man.
Absolutely, brother. Happy to do it.
Appreciate you.